Okay. Good morning, everybody. Thank you for attending this session, the Remit One event, the Innovations in Payments and Remittance. In this particular session, we will be discussing the digital payments boom and open banking, how to profit. I'll be hosting this session. My name is Ziad Menan. I'm the head of engineering at Remit One. For this session, we have about 1 hour and 15 minutes for this webinar. In the first, we'll do a quick introduction to our panelists and to Remit One. And then we'll have about 40 minutes or so where we will have a moderated panel discussion with our panelists. And then after that, we will have roughly 30 minutes or so to take questions from the audience. So if you have a question anytime during the session, just hit the Q&A button that you should be able to see at the bottom of your screen. And then at the end of the session, we will take we'll take the questions from the audiences and try to get through as many as we can in the time that we have available. Before we dive into the panel discussion, I'll do a quick introduction to Remit One. So Remit One is an organization. We assist a range of businesses. We assist startups, range of businesses within the remittance industry. Our clients include startups, well-established money transfer operators, as well as banks. And we provide them with various solutions and services, basically everything they need to start, run, and expand their global money transfer operation. We can help businesses get up and running quickly by guiding them through the process of obtaining a money service license, as well as the banking accounts that they need. We also provide businesses with our leading technology solutions, which enable them to run their entire remittance business, enhance the customer services, as well as simplify their operations. And finally, we also support business growth by connecting our clients to our vast global network that we've built over the years. Now, introducing the panelists today, we have some really interesting people on the panel, experts in the field. So I'll go through one by one. We have Damien Cahill, who is a co-founder and the COO at Vine. Hi, Damien. Thanks for joining us. Damien, along with his team, they've built an account-to-account payment solution using open banking. He has a decade of experience in senior sales and leadership roles, such as Amazon Pay and WorldPay. So welcome to the session, Damien. Next, we have Mahmoud Ali Kamran, who is the who's a director at eToro. Mahmoud is an experienced financial services executive. He has held many multiple positions as CEO, COO, director, and managing director at various different financial institutions in Pakistan, in the UAE, as well as the UK. In the last 7 years, Mahmoud co-founded a fully authorized EMI in the UK and launched a consumer and corporate debit card program, which he sold in 2019 to the company eToro Group, and is now the managing director of eToro Money. Welcome, Mahmoud, and thanks for joining us. Next, we have Nadeem Qureshi, who's currently the Chief Technology Officer at USI Money. Nadeem has over 20 years experience in leading and founding international remittance businesses. So great to have you on the panel today, Nadeem. And last but not least, we have Walter De Cruz, who's the VP of Business Development at Monio Solutions. Walter also has a wealth of experience. He has over 35 years experience within telecommunications, mobile, and financial institutions. Walter is a seasoned expert and business leader in the payment space with particular expertise in emerging technology. So welcome everybody on the panel, and thank you very much for joining us today. So without further ado, we'll get into the panel discussion. So to kick us off, the question that I have is, we've seen a lot of drastic changes in the payments industry in the last 5 to 6 years, especially in the area of e-payments or wallet payments. In your view, what have been the main developments in this industry? And let's start that off with Walter.
We were discussing this prior to this call. I think that there's certainly a lot more choices that's out there. Whether it's faster payments, open banking, blockchain, is a plethora of choices, and that's going to grow. It's about applying the right choice to the right vertical, if you like, or the right application. And obviously, it comes with that. There's all the different payment options, whether it's in Europe, Africa, the US, Asia. Open banking is stretching that. And moreover, it's compliance. There's more and more compliance. I think we'll all agree that compliance is a headache in the sense of it's getting more and more, but it's also some fundamentally very important to all our businesses, because if we're not complying, we don't have a business, right? Or we certainly endanger it. And I think that's broadly where the changes that are happening. So it's sort of like external changes, and then of course changes driven by technology coming out of the fintech industry. It's no doubt that fintechs lead all these changes, and it's about how we embrace the existing and legacy and traditional institutions and regulatory bodies that that we need support from to move forward.
Yep. Okay. Thanks for that, Walter. Mahmoud, in your view, what have been the main developments in this industry, in the payments industry, in the last 5 to 6 years?
I mean, we have seen a lot of development during, and I think 5 years have been extremely well for the payment industry, particularly in the last 2 years because of the COVID. COVID actually forced our hands in that, and it acted as a catalyst, where it's horrible for the whole world, but it acted as a catalyst when it came to the digital world. It impacted the whole industry in multiple ways. It changed the way the customer behaves, the way we perceive threats and risk, and the way we have to adopt to the different operational challenges. I mean, the customer behavior, they've seen serious level of digital adoption rates that have gone above. I'm talking about 150 to 200% growth. If I reflect on eToro, my own company, interestingly, we have seen a growth of approximately 800% on average during our different discussion with Visa. They told us that the industry has seen a boom of about 200% the digital adoption, the way the people are using more and more digital tools and e-wallets and cards and contactless. And this is just on the consumer side. Even on the B2B side, the businesses which have to make businesses move relatively slowly than the consumer, because consumers are much quicker to adopt. But we have seen businesses adopting to the new way, the new contactless way, particularly, and with this whole open banking. Although open banking started about 3-4 years ago, the whole discussion around open banking, but the adoption of open banking also happened very, very quickly in the last 2 years, because all of these digital elements and all of these new digital structures, they just came into and came together for the growth of this digital payment, particularly in the last 18 months. While saying all these things, and I will not discount the usage of the contactless card, which has grown. It was basically encouraged during the COVID era as well, and we were seeing everything that if you have to pay, use contactless pay. Cash was discouraged, and there were actually a lot of merchants who were not even taking cash. This is the only way you're going to pay is through contactless. Yeah. So we have seen a serious level of digital growth over the period. And while I say we should not ignore another thing which ran parallel, and these were the different threats and the risks that we have to accommodate. These were the security risk and these were the fraud risk, because they go parallel, they go side by side. The more digital growth that you have, the more risk that you will have around the security and around the fraud, and that impacts your operation resiliency. One of the biggest growth in eToro that we've seen in the last 2 years in our customer support and operational team. And I'm talking about more than 50% people we hired. And it was already a very big team, but we end up hiring more than 50% in those teams because we just wanted to catch up, to the pressure that we were seeing because of this massive growth in the industry. And we are not alone here. Every digital industry who were working with the digital payments and actually were not very happy 3 years or 4 years ago because we were dealing with a lot of costs that we cannot pass on to the customers, and we were dealing with a lot of issues, and the customer adoption was very slow as well because we can keep on saying cash is the king, cash is the king. I'm not saying that cash is still not the king, but cash has now a serious challenge in the last 18 months.
Yeah. So, I mean, leading on from that, Mahmood, do you think these developments are here to stay? And in particular, as you point out very correctly, that obviously the COVID situation has accelerated the adoption. So do you see these developments?
Most definitely, they are here to stay. Actually, we were already on this path. This path was already set about 5, 6, 8 years ago when this whole thing of the whole de-risking and the banks started shutting down their branches, and we started seeing more and more neo and challenger banks. This was the time that I founded the company as well. We were already on this path, but this path got accelerated in the last 2 years. And these changes are going to evolve further. We're looking at technologies. Open banking is going to change the way we see payments in the next 5 years, and we will see. I keep on telling my colleagues here that eventually in the next 5 to 6 years, you will also see the disappearance of physical card. So before we saw the disappearance of the cash in the market, now we're going to see the disappearance of the physical card as well. And this is where technologies like Apple Pay and Google Pay and contactless and wearable, I would just see how the culture has changed in London when the way people travel on underground now, which I remember 7, 8 years ago, it was Oyster card, which is now open to any contactless, and now open to any contactless wearable. And very soon, which the direction we are taking, we are getting used to, because of this new biometric technology and smartphones and Apple Pay and Google Pay, we're getting used to paying our payments using Apple Pay and Google Pay and all these different technologies. So we are actually going to the direction where not only all these development will stay, it will actually evolve into further digitalization of the payment.
Okay, that's great. Thanks, Mahmood. Let's go specifically into open banking. Damien, can you tell us what is open banking? How does it work?
Yeah, sure. So I think open banking for me is possibly not the most accurate term to describe what it is. There's two facets to this. There's open payments and open accounts. So if we deal with accounts first, there's two elements to open banking. There's account information service provision and payment initiation service provision. The account information enables many use cases, such as being able to immediately KYC a customer according to bank's KYC, or conducting affordability checks or spend pattern checks, which would be particularly relevant in the buy now, pay later space, which we've seen exploding over the last couple of years. It could be for, the gambling industry to promote responsible gambling, to be able to go in and say, yes, that person can afford it. Yes, they're not a degenerate gambler. They're not placing multiple bets with multiple operators, et cetera, et cetera. So there's a whole slew of use cases for account information.
Sure.
On the other side, on open payments with payment initiation. So the current setup today with card payments is when you land on an e-commerce page where they're asking for your card details, that's a card gateway. That talks to a card acquirer, who's the licensed body that can go through the schemes to get the money from the bank. Then obviously the next step is the schemes. These are MasterCard, Amex, JCB, whatever it might be. And then into the issuing bank or the credit provider to obtain the funds. And at each stage of that, there's an implied failure point if there's a technical breakdown in any one of those stages. And there's a fee at every stage. Also, because of the way that that system is set up, the settlement is quite slow. Sometimes T+1, so transaction +1, so you get your money the next day if you're a big operator and have managed to negotiate that with your provider. More typically, it's T+3 to 5 is fairly standard, but then again, there are some companies out there who won't give you your money for 180 days or all of your money for 180 days. And because of the credit and risk, particularly with travel these days, rolling reserves are being applied up to that 180 days, sometimes further. Massive security deposits are being required. Or in the worst case scenario, payment operators just saying, we don't like your credit and risk, we're switching you off. So please go and find an alternative. But what open banking does with the payments, it removes all of those failure points and all of those friction points, because at the end of the day, a card is nothing more than a passport into a bank account. That's all it is. And all that stuff in between is border control. On the account-to-account system with open banking, basically PSD2, the Payment Services Directive 2, is a wide-ranging piece of legislation. And within that, there is a key part that says to the banks, you will open your doors and tech stacks to account information providers and payment initiation providers. And what basically the payment initiation is, you put a button next to Visa and MasterCard and PayPal or whatever it is. And when you click that button, we're able to route the traffic into the bank selection page where the consumer will select their bank, in my case, Barclays. I would click that and I would be transported into the Barclays app. So we then hand off to the bank. So this is bank side, really, really secure and very trusted. And the payload would surface within the app that says, hey, Damien, Remit One wants to take £500 for that transaction you've just initiated. Click here to pay. They click pay, money leaves my account. It's in your account roughly 5 to 10 seconds later. And that's it. Really, really simple. So it's fairer because the cost is reduced. The onerous controls applied by card providers are removed. The success rate is higher because there's none of the 67 arbitrary decline codes that are brought into play, such as do not honor, which is no good to anyone because no one knows what's gone wrong with the do not honor decline code on a card. The consumer doesn't know it, they get frustrated. The merchant doesn't know, so they can't fix whatever's gone wrong. It's very, very straightforward with open banking. And the fraud aspects are removed because there's no 16 digits or CVV out in the ether. It is a bank level transaction with a biometric authentication that is married to the bank's data and the bank app. So more or less it's 100% secure. Effectively, it's opening up the financial services in terms of payments and the information that's attached to those payments. It's making it a lot fairer, taking it away from the duopolies and just delivering a better deal for merchants and consumers. On the consumer side, to the points made earlier about improvements in payments, everything's gone mobile. Right? Mobile was charging before COVID. Now it's even more. And I think the younger generations coming through are going to drive this. I was on a panel just before Christmas and with two guys from the card industry actually, and one of them had the point was, it's really frustrating with my kids because I say to them, "Where's your driving license?" "Oh, I don't know." "Where's your proof of insurance?" "Oh, I don't know." "Where's your debit card?" "I don't know." "Where's your mobile?" "Oh, it's here in my pocket." And it's got the bank app on it. It's got all that information there. And then, as well with open banking, it's allowing other technologies to come through like QR codes, which have had several false starts over the years. But I think with what's happened with COVID, they're here and they're here to stay. Everywhere you go, London, Italy, New York, they're everywhere. They're on menus, they're on invoices, they're on bus stops. And I don't think the cards are necessarily set up to cope with that because of the user experience, but open banking is.
Yeah.
So there you have it.
Okay. Excellent. Thanks very much for that, especially the analogy to border control and passports. Okay, so let's now look at maybe some of these use cases. In what ways can instant payments become a factor for competitiveness and differentiation? That question to you, Nadeem.
So I think the trend or the objective at the moment is to achieve a real-time settlement environment, and the fintech sort of industry, it's sort of moving, I would say, sort of aggressively and extremely fast. So you have to bring into you have to use the example that if you want to stay ahead, and you want to continue to retain, for example, your existing clients or acquire new clients, it's something that we were all sort of striving to achieve. Some of the things which are sort of driving, I think, the push towards this is customer expectation. Customers are much more savvy. Everyone wants access to their funds instantly. There's also, I think Damien mentioned about the regulatory side, things like PSD2. I think it was sort of the impact was underestimated or underrated, but it was very wide ranging, and it's created, I think, sort of a big legacy issue which you will see over the next 5 years, as Mahmoud was pointing out earlier on. And from a regulatory standpoint, it not only does it reduce risk, but it enhances things like your reporting. It betters things like the onboarding and elements like that. At the same time, in the supply chain, because again, there's various elements, whether you're the consumer or the payment service provider or the gateway or the technology provider, it creates opportunity. So it creates opportunity for new players, new commercial type environments or businesses to sort of come into the space. I think in terms of the existing players or institutions or entities, however you wish to define it, it creates the need for us to go back, relook at our, whether it's in-house tech or external, to sort of go reassess and see that those functionalities and things are in play. For example, something again Damien mentioned earlier about the onboarding experience. So if my onboarding experience is swift and efficient, and my payments are sort of done instantly, and funds are made available, and this is, by the way, individuals and businesses. It can apply on both sides. And traditionally, moving away from sort of the locally or internationally sort of the delays and the implications of sort of a break or a blocker within the chain when you get back sort of the declinings or the sort of the tech breakages, etc. So effectively, a lot of this stuff is in play, but not moving ahead and working or striving to achieve, creating products which are instant is effectively us trying to say that we're going to put our business at risk, potentially could lose clients. It actually affects the whole commercial viability of it. So it's something which is absolutely, it's a growing trend. We've definitely not seen the full impact of it. We're only now starting to see, some of the changes that are coming about, as a result of this.
Yeah. So I think that's an interesting point. Like, what are the implications that instant payments have via open banking? What are the implications of this on the existing money transfer infrastructure?
So, in terms of the implications, some of the positives, if we were to speak to using open banking APIs, it would allow us to create that level playing field with the old sort of established banks, for example. Although fintech is on the rise and the banking channels are slowly de-risking or declining or maybe not being as competitive, they still hold a significant chunk of that process flow. So open banking allows us to effectively use these secure channels for consumers to go in to, for example, start creating cost benefits for them that over the course of the year, if you're sending X, by you transferring, for example, to so and so provider, you could be saving Y, and it gives the consumer a better understanding and effectively more flexibility. So in terms of the positiveness, it creates a new client type, new client acquisition, and things like that. On another level, we make sure that we retain existing clients. Creating new functionality creates the opportunity for us to do things like cross-selling, for example, adding sort of additional cross-selling opportunities and sort of increasing your commercial income, and things like that. And again, the access to liquidity, for example, increasing efficiency, just becoming more efficient, making sure that you can scale up as a business. So I think just, digitizing your business without really, it's like a continuous thing. It's a continuous merry-go-round. It's not something that we can develop and implement and say that, next year we'll relook at it again. Every day you are seeing new elements come in, new innovative ways, effectively. So, PSD2 for us has just opened up the doors, and sort of the opportunities are sort of endless, really. And over the coming years, we will definitely be seeing that. You will start to see the decline of cash already. It's a dying commodity in terms of settlements. It creates risk, etc. But the same thing for cards. It literally will go to my mobile phone. I would not even want to carry a physical card. I don't even want to use it for contactless anymore. I just want to tap my phone. The phone is the one thing I will never forget in the morning. My keys and my wallet, they're the ones that sort of drop below the sofas, etc. And it's not a big issue. If I lose my phone, all hell breaks loose. So effectively, my whole user experience will be via that phone. So these things are sort of extremely crucial to understand so that we can adapt beforehand, especially for the, I would say, the medium-sized enterprises. Obviously, the big established players already have the necessary infrastructure, etc., and they're looking at the forward trends. But we have to try and use this, I would say, facility, which was sort of granted, I think, 2016. That we actually benefit from it, because it's all about creating that level playing field. Yeah. Sure.
Yeah, absolutely. Taking this opportunity and and maximizing that. So yeah, on that water. So how can MSBs build more profitable client relationships, leveraging instant payments such as open banking? You're on mute, Walter. The classic Zoom.
Formula for that hasn't really changed, just because it's instant payments. I think Nadeem sort of alluded to the value-added service. Yesterday we heard from one of your partners, Packy, about the bill paying and the growth of the bill paying market. So how you remain competitive, because instant payments is instant payments. I mean, the cost base is going to be the same right across the base. The SLA is the same, right? So it's your app, your user experience, and all the fundamental things that have really applied to brick and mortar businesses as well, right? How do you stand out in front of the crowd? How do you retain customers? Those are issues that, whether you're a brick and mortar business or a pay-per-click business, it's the same thing, right? How do you get people in and keep them in? And I see the growth of subscription type models in this area, where you're paying a subscription fee and you get so many things, including so many payments, whether it be domestic or local or international, so many activities like card, the equivalent to a point of sales, card payment, like using your phone, right? So I think that's going to be more and more prevalent, because there's no other way you can actually build the profitability up in a market where margins are absolutely shrinking, and in a way compliance costs are not, if nothing, they're going up, right? So I see the way that how you can create customer stickiness, if you like, is through a subscription model, because if you're paying someone each month, then you're going to use them, right? And you're not going to go and download another competitor's app from the App Store or from Google Play. You've got that loyalty, and so things like loyalty programs and so on, they become as important as they've been for previous prepaid card vendors, right? You can go out and get so many cards, prepaid. What's the differentiator, right? What is it that attracts the customers, and not only attracts them, but keeps them as well? Because the cost of customer acquisition isn't going down in a crowded market. So it's often cheaper to keep a customer than it is to pay for a customer. And there's some really, yesterday, Eversend talked about how they use their marketing budget to acquire customers using fiat rather than pay-per-click points, paying Google or Facebook to bring people on. And I thought in a market like Africa where, $1 or $2 is quite a lot, I think that's brilliant. Why do you want to pay a faceless multinational corporation, right? And so you have to be innovative in how you bring the customers in, and you need a really good roadmap, if not all the products, as Nadeem said, you have to do this all the time. You have to stay in front of the game. You have to stay ahead of compliance, ahead of regulation, and ahead of your competitors. And that is probably the only thing that's changed about that is you can't afford to sit down and read a newspaper and think, oh, I can do that tomorrow. You have to do it all the time. And, we need 3D views of all our businesses, whether it's on knowing your customer, knowing how your network is performing to make those decisions, right? And I think the emphasis should be, that's what I'm focused on. That's the sort of discussions I'm having with payment service providers and RegTech companies, because the growth of e-commerce, if you see that and how they don't comply. You can go on Amazon, set up an account, have very basic ID, right? Verification. So there's things that I have to pull all these together. And as long as we remain vigilant and on top of it and work within our ecosystem with the excellent ecosystem that Remit One offers, there's excellent choices there. I think that's what it all leads to, is being, having that choice and being able to read the market and rely on the likes of Remit One to ensure that within their ecosystem, that breadth of choice, whether it's RegTech, payment rails, pay in, pay out, all of that, it's the ability to be able to flex and move is so critical.
Yeah, absolutely. There are multiple facets that you've got to, you've got to keep your eye on every single one and keep up to pace with every single one. It's a challenge, and as you mentioned, obviously Remit One can help with that, but it is a challenge for the MSPs. So let's move on to the next question. How are instant payments being positioned in the Middle East, in Africa, in Europe, and beyond? Are these being positioned as the new normal, or are they being positioned as premium services? What can PSPs do to set their offering apart from those of the others? Let's go to Mahmoud on that question.
Let's see. Instant payment, basically, this is the new revolution we're talking about. This is what it is now and the future, which used to be a developed country prerogative that you have SEPA instant, or you have faster payment, and you expect the payment to be in your account within seconds. Mm-hmm. This is now growing rapidly across the world as well. This is now an expectation. This is not something like the question, is this premium? No, it's no longer a premium anymore. This is expected. when you do a transaction, when you go to a bank, you go with this mindset, and you ask the question, why is going to take 3 days? Why is going to take 5 days? It still seems like the stories of the past, what your father used to tell you, your father a banker. Yeah, we used to do this transaction. It used to take like 3 days or 4 days, and it used to go through the manual ledgers and big books and all this thing. It is unexpected. If a bank is not ready, and unfortunately in some of the developing countries, banks are still not ready, they're still working on the legacy system, then they are in the history, and they will be taken over by very quickly by the new technology providers. And we have seen this across Middle East as well, and we have seen this in all the developing countries, where the new banks, they are adopting technologies, and they are trying to build infrastructures. And biggest role is played here by the central bank of those countries, because it's the central banks or the payment facilitators technologies in those countries that are promoting instant payment very, very rapidly. In the Middle East, I believe they launched. I'm not very deeply familiar with the Middle Eastern markets, but Middle East has been catching up with the whole instant payment for the last 5-6 years as well. And I'm talking about my first job was in United Arab Emirates when I was 18 years old, and I was still working on a telex system. I was still sending a SWIFT message, working with Bank of America or other banks. But this is like, as I said, this is past. The basic expectation for someone to open a bank account or deal with any transaction is you expect that transactions to be instant, at least on the local level. I'm not talking about international level right now. I'm not talking about the cross borders. Cross borders still needs to catch up, and there's still a lot of complexity when we talk about the cross border. But at least on the local level, your domestic banking payment scheme needs to be instant, and they are catching up. And we have seen a lot of progress now happening, particularly in some of those Middle Eastern countries which are a little bit progressive, like UAE, Saudi Arabia, Kuwait, Qatar. They are quite progressive, and they have adopted these technologies over the last 5 to 10 years. But simple thing. I mean, if you're not in this regime, you're living in the past. It's as simple as that. The banks have to make those changes. They have to upgrade their system. They have to catch up with the world. Whether it's, as I said, whether it's Middle East or developing countries, it's the same story. I've been recently working a lot on the Southeast Asian market, and I was very interested to see that how progress a Singapore market is, and Malaysian market and Indonesian market is. And then these are Southeast Asian market. Domestically, they have adopted fast payment systems similar to what we see in UK as faster payment, or in Europe as SEPA. Because this is what, as I keep on saying, this is what is expected. You can't offer a product to the customer and say, well, you make a payment, it will take you 3 days, and it is coming to a point where it will become unheard of. And like, for example, if in UK, if you say, oh, it will take you 5 days for me to send you a bank transfer, they will not believe you, because it doesn't happen. If you're using faster payment, it's just so instant that if you that transferring money, it will take me less than 1 second. If you want to try, you can try right now. Transfer a few 1,000 quids, and I will show you. But this is the expectation, right? It's an expectation from both the sender and the beneficiary side, and this is innovation.
Yeah, absolutely. No, I think you've really hit the nail on the head there. That this is what's expected now, and it seems like this is the case everywhere, not just in some regions. Okay. So when you're looking at a payment vendor or a gateway or provider, whatever term you want to use, what are the critical questions to ask when evaluating a provider? Nadeem, let's go to you with that one.
So, I mean, apart from the sort of the basics that one would effectively undertake in terms of reputational awareness and the basic research, I think the key areas are things like the reliability, things like settlement times, again, trying to achieve as close to real time as possible, and sort of the cost, so the transactional cost. So if it's like a gateway provider, the variation in fees from the different card types, and even within the card networks, there's different user types. So a business card is not treated or charged in the same way an individual's debit card. So there's sort of a variation in fees. It's always best to go through sort of a recommendation of someone who's particularly used providers before. And once you do establish, I think sometimes we're a bit short-handed or short-sighted. So we just look at the immediate transaction cost. For example, Visa card is 0.x. And we look at the monthly fees, and we would sort of use that as a comparison to other providers and say, no, these guys are cheaper. But I think sometimes we overlook the fact about the stuff. It's not actually hidden. It's always there within the contract, but it's something we don't really pay attention to. So things like settlement fees, for example, making sure that you've factored in the various card types. So a Visa debit for an individual, as opposed to Visa debit for example, for the business, and also looking at the things like rollover fees. All of those small fees effectively become quite a big issue when you're a high turnover business, especially in the payments industry. And that's when you sort of feel the pinch. That's when you realize, actually, my 0.2% actually worked out to 0.4 because I did not factor in X, Y, and Z. Looking at the term of the contract, for example, just to make sure that you have flexibility if you want to exit. We're in an industry which is moving extremely fast. I would not want to tie myself up for 2 years or 24-month contract and pay these high fees. So things like flexibility. I think the main other things that we need to look at, and sometimes we sort of avoid, is sort of your merchant experience in terms of the access to data or information on the portals, what types of reports there are, the error messages. Again, it was brought up before. Understanding efficiently and quickly what's gone wrong, where has it gone wrong, making sure that those sort of things are there, and the support. So if you have questions, can I pick up the phone? Are they based in the US, for example, or is it just an online ticket and I have to wait for 6 hours? So it's all of the things maybe that we don't think really affect us. I think that's what the key area is to look at, and not just generalize everything. Effectively, your goal is, I want real-time settlements. I want to have a super efficient process or payment experience for my consumer. How do I get to that? And then start working your way backwards. Don't start from, where you are. And at the end of the day, I think a natural talent from us all is negotiation. So just try and negotiate. It's not going to cost you anything to go back and say, would you mind if I pay you 0.2? Well, actually, don't even say, would you mind? Say, I'll only pay you 0.2, because it's just a competitive market, and there's absolutely room to effectively negotiate rates. And just coming back to the TAM, sometimes you have newer providers which come in with different types of functions and costs and benefits. And if you're sort of tied into a previous contract, it sort of then doesn't allow you to swiftly adapt. So things like terms have a knock-on effect, maybe not today, but further down the line. So I think all of these things should be generalized and looked at, when selecting a gateway, a merchant, or any type of provider. I think it's
Sure. Okay, yeah. Thanks for that, Nadeem. It's I think don't just look at the obvious things that we all think about, but there are the finer details that will add up. So don't forget about those things. That's excellent. Thank you. Okay, now let's look at some of the challenges with instant payments. How does fraud present a challenge for these new payment types, such as instant payments, such as open banking? Does faster payments mean faster fraud? Damien, what are your thoughts on that?
Sorry, just getting off mute.
Yeah.
Look, where fraudsters will always try and penetrate systems, right? That's a given. It's a fact of life. with the way that strong customer authentication has been brought in, so SCA now says that for card payments, it's no longer acceptable for the consumer just to have the 16 digits of CVV, the expiry. They've got to have a further 2 out of 3 prescribed things. And those 3 things are something you are, something you have, and something you know. This is why when you're carrying out just a normal e-commerce transaction, you'll probably get there, well, hang on a second, we just sent you a text message with a one-time passcode, or whatever it might be, because that's the something they know, and the something they have is the phone. If you look at the way Vine is set up, where the transaction initiates through the phone with the biometric ID into the bank app that has that registered, SCA is already baked in, right? So in the case of how we're set up, it would be very, very difficult to spoof the system and defraud it, because you have to have those things present. I'm not saying it's entirely impossible, but it's far more secure than having 16 digits of CVVs flying around. So, I mean, as well, the way these fraudsters work with card payments, they will execute phishing attacks to get you to, verify your card details with your mobile phone provider or something like that. They'll obtain, 20, 30, 50,000 card details, and then run the velocity check transactions with £1 to a charity. And if it goes through, then they start spending, £500 with a remittance company, £1,000 with a retailer, whatever it might be. You can't fish attack with those bank account things, because it's closed loop. You can't fish attack someone's thumbprint or their face ID, and that's got to be present to get you into the bank app itself. You could fish for the PIN code, but then you still need the app that's tied to the phone that was registered to the bank in the first place. So I think it's a much more secure payment system. I don't think it means faster fraud. In fact, quite the opposite.
Mm-hmm, mm-hmm. Okay. Yeah, that's thanks for that, Damien. What about impact on profits? Will we see? What will we see if we throw in cryptocurrency and blockchain into the digital mix? Walter,
I think you'll see increase in profits, and simply put, the cost of compliance will go down if you look at blockchain and you look at it in the way it ought to be looked. Yesterday, I talked about redefining that blockchain, because it isn't just about value or an asset, it's all the underlying the information around that, whether it's source of funds, where it's coming from, where it's going to, where it was initiated from, the providers that got in between that, any terms, if it's a B2B type of transaction, it could be on delivery of a service or whatever, right? So those things are going to have a massively positive impact on profits, in that you're taking a lot of the costs. You're also taking out potentially third party or middlemen in those transactions that arbitrate that whatever that transaction is. It could be a cross-border payment or even a B2B payment locally, right? Where you may be, I don't know, paying for someone to do something, and once they've done it, you release the funds, right? Yeah. So that's where I see it's actually driving. It'll potentially, it will increase profitability, because you're making the transaction and the compliance piece more efficient. Yeah.
right.
So, and when you then throw in, the digital world, the digital payments world, of course, the price points are going to go down. But if you've got an efficient back office, the way you connect to your partners and so on, then you're always going to be ahead of the game, right? So you're no longer having to deal with a legacy system that takes forever to change or route to a different payment channel, right? I mean, you mentioned my telecoms experience. What we're seeing here is what's been going on in that world 20 years ago, where you've got massive wholesale markets that can move and change different fiber routes and whatever, depending on what the market price is on that particular day. Usually that's typically, if you look at the banks, still today, 60-70% of profits from all the banks, right? And whether we like it or not as fintechs, that's a key component, and that's a complex area. And the better you are at getting at that, and there's a lot of really good fintech solutions in that area, really extending the payment as a service and gateway, where they built those functionalities in, where you can plug into third-party services to manage those things. I think that's really exciting for fintechs right across the board. And, if they utilize these things, they'll become.
Sure. Okay, yeah, that's good. Damien, I'm going to come to you on open banking and blockchain specifically, but I just want to get your thoughts, Mahmoud. Any thoughts from you on, throwing in cryptocurrencies, throwing in blockchain into this whole digital mix?
Cryptocurrency and blockchain, of course, blockchain is the technology behind cryptocurrency, which is absolutely amazing and brilliant and has so many use case scenarios other than just cryptocurrency. Cryptocurrency is increasingly becoming popular, and we have seen, while it's seriously fluctuating, no advice here, by the way, it's completely at your risk, but it is a new trend, and I'm not saying it's a new trend just because of the trade and investment point of view. Cryptocurrency is going to now evolve into method of payment as well. And the reason I'm saying is because I had so many conversations with both Visa and MasterCard. Right now, Visa launched their product with Circle in US, which is based on USDC, which is a stable coin. And they're planning to do the same thing for GBP stablecoin and Euro stablecoin in UK and Europe. And of course, they're working with different partners, and they're looking for different partners to initiate this thing, which becomes a settlement currency. And this is where I'm taking you. This is the evolution of how cryptocurrency will look like. So eventually, while USDC right now is a settlement currency for Visa in US, GBP stablecoin and Euro stablecoin will become a settlement currency for Visa in UK and Europe. And how amazing it is. I mean, like 6 years ago, I used to think it was a scam, and now I'm saying, hey, this is the future, and this is going to change. Because what is the biggest challenge, and this is one of the challenges that Visa solved with USDC Invent, is opening a bank account for any money remittance company or any other settlement or merchants. Or your biggest challenge always had to open a bank account, and so you can settle your funds. So using this settlement currency, which right now they're experimenting in US with USDC, they have taken that pain point out. Because you can hold cryptocurrency, you can be under your own license permission, you have the permission to hold cryptocurrency yourself, and then you can make settlement to, let's say, Visa in USDC, or when they'll launch a GBP stablecoin and Euro stablecoin in UK and Europe. This is the evolution. I'm once again, I'm not talking about specifically Bitcoin and Ethereum and all these things, because they are more about trade and more about investment, which is amazing, and which is about trade and profitability. But using cryptocurrency and using this technology for the settlement purposes, this is the next evolution.
Okay, yeah. Let's see what we get there. Damien, specifically, open banking and blockchain. What are your thoughts on that?
Fairly short and sweet, actually. Yeah, to speak to Mahmoud and Walter's points. The blockchain and open banking, right? Open banking already makes, the world of payments just so much easier for consumers and merchants, and the adoption rates are huge. For operational efficiency on the merchant side, and for record keeping and keeping an ever increasingly digital life in order and organized for the consumers, when you start to wrap in finances with the blockchain on the merchant side and have all those other partners and providers on that ledger who you're using to provide your service, it makes your business immeasurably better, right? As well as moving the money in and out between your consumer base and having that tied up to all the suppliers, which is the compliance and regulatory piece in payments. And we've learned over the years, if you try and do everything for everyone, you're not going to do anything particularly well, right? You need to be focusing on what your business is. And that will, by bringing the blockchain into it and centralizing all of your operations and your information, you're optimizing for operational effectiveness. For the consumers who are buying things from multiple sources, again, if they can tie their bank account into one central ledger of who they're paying and when they're paying, so like my Spotify subscription tomorrow, my Netflix subscription next week, my car insurance the week after, the house insurance, I mean, it's crazy. I live in Italy. My wife's family is from the south of Italy. My mother-in-law still keeps all the household expenses in a ledger book, unbelievably. Whereas, my wife has now moved to digitization of everything that goes on within our household, because there's a lot of stuff. And if you can get all that in one place, it just makes life so much easier. So I think it's just going to be a natural progression that this is going to happen. Mahmoud's right, cryptocurrency. We do process for cryptocurrency wallets. We don't hold crypto ourselves. We do process for some crypto exchanges. And I think that relationship will become more entwined and intertwined over time. Because crypto is here to stay, whether you like it or not. It's coming down the track, and it's the preferred currency for some people.
Yep.
So yeah, there is no stopping innovation, right? It's just simply put, adapt or die. And that's the world we live in now. And these new technologies are going to have to be embraced.
Yeah. Okay. Yeah. All right. Thanks, Damien. Okay, last question for the panelists, and we'll do a sort of roundhouse go around. What's next? What's coming up? What should we expect to see in this space in the next year, 2 years, 3 years? What are your thoughts? Let's start with Mahmoud.
What I think what is going to happen, and what we should watch out for digital payments in the next 12 months is, as more and more you see consumers who are coming to online, you will see evolution happening in the digital payment landscape. You will see increased use of digital wallet. The way the digital wallets are used, you will see multiple technologies like blockchains, or the way consumers are using crypto for payments, or open banking for payments, or different digital wallets for payments. You will see multiple ways. The behavioral change will happen, because this is happening now, and this will evolve as over the next 12 months. And the businesses particularly are trying to adopt more and more different way to adopt to these changes. We will also see, I think, one of the key player in all this thing, particularly for UK and Europe, has been the strong customer authentication. Because the strong customer authentication will have the mass adoption of biometric authentication. What is our biggest problem is what is our bigger risk is fraud, like you talked about earlier. And if we can mitigate that fraud risk here, my adoption towards biometric authentication, or my adoption towards digital payments, will increase manifold. And this is what we're going to see. Strong customer authentication will be is implemented now. Every cardholder or every merchant has to comply with that rule. You will see this making a major change in the way the digital payments will happen the next 12 months. Another thing that I see, because we keep on talking about domestic payments and how instant domestic payments are, another thing that I'm going to see is, which I see that will feel happening, is cross-border payments, a real-time payment that will go global. It's not just me paying you in UK, or me using SEPA Instant paying you in Europe. It's also me paying my father in Canada, or my brother in America. And this cross-border payment, which is now being adopted with some of the leading money transfer companies, will also now become more and more instant. This is how the payment industry is coming together. It's not just your domestic, it's also your international. And of course, as the internet is becoming more and more fast, I want to see personally what will happen once 5G will become more adopted across technology, how I believe that will have a very major change the way we see the payments as well, because payments will become much more faster, user access will become much more better, UI will become much more better with these, and mobile technology, because 5G is actually directly connected with the way we use mobile phone because of biometric, like Damien was saying. My son, he's also 18 years old. Everything is on his mobile phone. They really get irritated if they say, okay, what is, how you want to pay. They want to do everything with their mobile. They want to use their student ID using their mobile phone. Their library card is on their mobile phone. Their debit card is on their mobile phone. They use Google Pay, Apple Pay. I mean, this is what is going to happen. And I'm personally very much interested how 5G is going to make all these changes, because this is how rapid it will happen in future. So I think in the next 12 months, evolution of what we are seeing now, or we will see in the next 12 months, evolving very quickly.
Sure. Okay, all right, that's great. Thanks, Mahmood. Just a quick reminder, if you do have any questions for our panelists, you can just pop the question into the Q&A. There's a Q&A button at the bottom of the screen, and we can take those at the end. Let's go to you, Walter. What are your thoughts on what we should expect to see in the next year or so?
Look, I can't really add too much in that. Mahmood just did a fantastic job on describing, the sort of the big movements. But, to drill down on some of it, I'd like to talk a bit more about embedded finance services, particularly in markets like Africa, where the app will have the ability to get some microfinancing, to pay things, to finance their lives on a very local level, right? And I think embedded finance is a big thing, and that's going to be driven by DeFi, which is a blockchain movement, if you like. And I also think there's going to be a tremendous amount of consolidation. Every man and his dog is into this right now. And they're into it. People I've known for a long time. I'm into blockchain. I'm into crypto, right? Yeah, right. Yeah, because it's the hot thing to be in. And if you look historically at these sort of, I wouldn't call this a fad or a trend, and that's basically what they, the institutionals are saying. They've been saying this is a fad for 20 years, or 10 plus years, right? That's not a fad. That's not even a trend. That's a way of life. That's a fact of life, right? In saying all of that, there's a lot of players. It's going to consolidate, and I think you'll see in terms of crypto anyway, an evolution. Stable coins being very much part of almost the central bank digital currency world, right? So settlement and liquidity and all that for cross-border payments, vanilla flavored payments, domestic and international, will become, as Mahmood admitted, it'll be instant, whether it's local or international. But then you'll have specific cryptos for different types of application, or what I would call smart contracts, as opposed to crypto or blockchain. So you're selling wheat or big commodities across borders, right? And those are the sort of where Bitcoin or a form of crypto like XRP is more capable because of the liquidity in that with that crypto, right? So that's what's going to happen. It's going to formalize in terms of regulation, certainly at regional level. I don't expect consistency globally anytime soon, but it'll certainly start to look like that. As I said, I think DeFi and embedded finance is just, these are the great changes that are going to happen in the cloud or in the wallet, right?
Cool, excellent. Yeah, some interesting predictions there from Walter. Thanks, Walter. Nadeem, anything to add?
Right. So talking about the next 12 months is like a child sitting on Santa's lap and giving his Christmas shopping list. There's sort of a.
I guess that makes me Santa, does it?
That's like, yeah. So there's things that we are predicting we're going to see. There's things we'd like to see. There comes great excitement, but then there also comes a great worry from technical levels of trying to work out how we're actually going to achieve that. So personally, and just again, a personal opinion, I think we're going to see great strides in things like the onboarding experience. I think literally it's going to be the app, from the point of login with the thumb to the transaction. Can I do it in one click? And would my money get there in, instantaneously? I think that's what it's all about. So it's that whole user journey. You'll start to see a reduction in the supply chain, because in order for someone to achieve that, they need to have a reduced supply chain, and have that sort of onboarding experience where it's actually more of an incentive for somebody to come over and register and become a client. So whether it's using open banking APIs or whether it's some other innovative tools, in terms of a consumer experience, is actually going to be extremely exciting from what it is at the moment. And it's going to be extremely fluid. And this goes back to the things that we've sort of picked up earlier on today from the other panelists, that there's a lot of changes. Nobody's really in a position to predict how things are going to be 12 months in terms of comparative to your supply or your services of today. Yes, the generic product is the same, but the way in which we're going to be executing that product or enabling those services in 12 months from today are going to be quite a little bit different. And it's just like from the 4G to the 5G comment earlier on. I mean, that's something, if you go back to pre-smartphone ages and to what flexibility, etc. we have now, I mean, 5G is just only going to enhance that whole element. So there's like a wide-ranging environment that's pushing and driving this growth, and that's why it's actually quite exciting. But I suppose for people like yourselves at R1, it's going to present challenges of creating all of the new additional functions, etc. But for us, it's super exciting. Yeah, but we're looking forward to it.
Yeah. I think that's generally the sort of, it's going to be challenging, but at the same time, there are so many different opportunities that we could start to see materializing. So it's a sort of, there's the excitement, but there's the challenge. Damien, what about from your perspective? What do you see, or what do you expect to see in the next year or so?
A whole ton of stuff. I think if everyone said 2020 was the year for open banking, and it just wasn't, right? We knew it wasn't. And talking with, well, I'll give you the example. We launched in 2020 in January, and our first 3 customers were travel providers. So you can see how that went. But no, I mean, look, late 2020 and 2021 is the year of the merchant adoption. This is when the merchants and the PSPs are going to start really waking up to this. Okay, 2022, more of the same, but with more of an uptick in consumers getting involved in not just open banking, but cryptocurrency as well. And some of the numbers within open banking, if we look at January last year, 180,000 consumers had used open banking as a service. Today, it's like 5 million. That's a significant right-hand tick, or the hockey stick, as they call it. And that's only going to increase as awareness gets out, more bigger merchants start adopting this. We've seen the recent rollout of open banking on the HMRC, processing income tax payments. And the more use cases are going to fall out of this over the next 12 months. And I would say, getting into H2 of next year and into 2023, that's going to be when the consumer drive really starts to happen, and happen at pace. Generally speaking, COVID's been terrible, right, on so many levels for so many people, and has just caused so much damage, both on a personal and a business level, for just about everyone I know. But some good has come out of it. And in payments, we're bringing in people into the digital age who previously, they weren't interested. So my mother-in-law, bless her, as an example, she's 71. She got her first credit card last year, ever. Everything was in cash because they live in the south of Italy, right? And it's still a national sport to screw the government out of income tax down there. But yeah, so she's now in the digital payments world, which is great. And she's like, I don't know why I didn't ever do this before. Yeah, my mum, 87, she's got all the shopping apps. We've got her on WhatsApp, and she's moved off of her BT package for international calls because now she can do it on WhatsApp. So it's bringing that end of the spectrum in, but also at the younger end, the innovations now that are being driven at a school level for technology and what the kids are being taught is just setting us up for future generational recovery and improvement over what's happened to us the last few years with financial crisis, pandemic, you know, whatever it might be. So I think a lot of good has come out of this in some ways. And payments, it's just going to be more mobile, then a bit more mobile, and then guess what? More mobile. And coupled up with, you know, open banking and really, really super slick user experiences and ways for them to access and move their money. It's just, yeah, that's where it's going.
Yeah. Okay. All right. Great. Thanks very much, Damon. Okay, we have one question from the audience, so let's take that question. While the digital transfer remittance is growing rapidly, is cash-to-cash transaction going to survive, especially in the underdeveloped economies? I'll throw that on to Mahmood. What are your thoughts on that, Mahmood?
Yeah, simple answer is yes for now, particularly when we talk about underdeveloped countries, because the infrastructure is still not there. As I said, it is in progress, it is building. But what happened in the last 18-20 months, because of pandemic, the use of digital payments have grown globally. And this has impacted the developing countries as much as it has impacted developed countries as well. So developing countries who are catching up to the digital payments regime, they have done changes, because whenever you talk about the digital payment regime, it's not just the infrastructure, it's also the regulations those developing countries have to adopt. But as I said, simple answer is yes, it still will survive. We will still see cash transactions, particularly in developing countries, for at least the foreseeable future. But it is going down. The trend will change. It is inevitable. Whatever happening in the developed countries will eventually translate to happen in the developing countries as well.
Sure. Okay. All right. Great. Okay. I think we can conclude there. So that just leaves me to thank all the panelists. Thank you very much, Damien, Mahmood, Walter, and Nadeem. It's been a really good session. Very interesting insights from you guys. And thank you to all the attendees who attended the session. Hopefully you found it interesting and useful for yourselves as well. And our next panel session will start today at 1:30, and that session is on stepping up mobile payments and reaching the unbanked. So make sure you don't miss that one. And if you want to review what's been discussed today, this session will be available. There will be a written summary and a video will be uploaded later on in the day, so you'll be able to access that as well. So yeah, I'll conclude with thanking everybody again. Thanks to all the panelists, thanks to all the attendees, and take care. Have a great rest of the day. Bye-bye.
Thank you very much. Thank you very much for the opportunity. Take care. Bye.